Welcome back, traders and investors. We have Chris Temple on the line, and he is the editor and publisher of the National Investor. He sees his roles as dispensing knowledge to his subscribers, just not information. He analyzes and makes understandable for his readers the macro events world over. And Chris, you must be a very busy man with all these macro situations going on in the markets.
Well, I'll tell you, you can spend morning, noon, and night, and sometimes it seems I do, just trying to absorb everything and understand it and figure out whether to zig or zag, or more often lately to do nothing and see where things settle.
Okay, so let's try and categorize, from most important to least important of just by the way, the S&Ps are tanking here while we're on the show. We've just made a new low. We're down a buck and a quarter at 1931 and a quarter. Not sure what hit the markets, but boy, there's a lot of different things going on. You have the Russia-Ukraine situation, you have the Iraq situation, you have Israel and the Gaza Strip. How do you prioritize those, and from most important to least important?
Well, Joel, the first thing I do to back up just one step from that
Okay.
is I have tried to tell people that you need to look at investment themes that were working before all of these geopolitical fears started to become more acute. And if we can identify ones that look even better, then you can take some positions in some good companies and some good sectors. I am in a position right now where I'm telling people to keep about half of their money in cash,
Wow.
and with the rest we're in a combination of ETFs, chiefly long-term treasuries and gold-oriented, and we've got a handful of individual stocks, mostly in agriculture, energy, gold miners, a few special situations beyond that. But I'll tell you, I'm not going to get on and say I know how all this is going to shake out, because I certainly don't. But I think that what people can and should be doing right now, especially with my gut telling me that this correction is not over, is that right now is a time that people should be less interested in trying to get, a couple basis points here or there, trading certain things, and be working on your shopping list. Be looking at companies that maybe in a recent past got beat up a little bit with some of these downward moves in stocks. Find the better stories, and when they get to a good, attractive price, start to accumulate some of these things. We don't know where things are going to end up with Ukraine and Russia. I hope things end up peaceful. Right now, this whole sanctions regimen is starting to get, it's going from damaging economies to becoming absurd and childish. It's going to help South American companies. It's going to help Chinese companies and some other ones that will now export foodstuffs to Russia, for example, when EU and U.S. companies won't. Long term, I think energy, you have to be bullish. I was bullish on oil and natural gas long term before all this started, and despite some weakness again this morning in oil particularly, because global economic growth being weaker is catching up to the price, I still love that sector long term. And there's been some gifts that the market has given investors in just the last few weeks, with some really good companies that are a quarter or 30% off of their 52-week highs.
You want to share some of those with us?
Well, absolutely. One of my favorites for a long time. It's a company that I had covered years ago. I just added it back to my list this last spring. Is Tidewater. They're a big company based in New Orleans. They're one of the largest companies in the world that has a fleet of offshore vessels, chiefly to help the energy industry, but they do some other shipping and tugging and that type of thing as well. Their conference call last week, Joel, I think was way better than people expected. There's been a bit of a glut of both offshore vessels and drilling rigs in the offshore energy industry, but they're being absorbed a lot faster than people were realizing. Tidewater's own financials look great. You're talking about a company trading at a forward PE for the next fiscal year of something like 8, which is ridiculous. Its earnings are growing rapidly. It's got a nice 2% dividend. So I like them. I also have been talking to my subscribers a lot about some of the more conventional E&P companies. My belief is that much of the energy sector especially these countries that have just been going nuts, poking holes in the ground in these new shale plays. To me, a lot of the behavior and the financing is a little different from the subprime mortgage bubble. This is going to end badly because the economics and the geology, neither of them, are going to support this fantasy that we've been told that we're going to have these endless supplies of shale oil and gas for as far as the eye can see. Once that starts to set in a little bit more, and it's only beginning in the investment marketplace, investors are going to re-embrace companies that have got more conventional reserves and production and that have been left behind as, the Pioneers of the world and some other ones have gone up to nosebleed levels. And one of my favorites in that area is a company called Energy XXI. They're a Bermuda-based company, but they have now one of the largest positions in the shallow waters of the Gulf of any company after they've made a couple acquisitions in the recent past. And here again, you're talking about a company trading at a forward PE, in its case, of just a little bit over 10. It's got a 2.5% dividend. Their reserves have exploded higher in the recent past. Not by fracking or nothing dependent on that, but again, more conventional offshore production. It's a great, great company. EXXI is a symbol for that one.
EXXI. Okay.
Correct.
So there's a couple things you like. I also heard you mention something about some gold. You had some gold holdings. Was this
Right.
just based on the geopolitical mess that we have out there? Is there something you're seeing in the technicals that are inspiring that position?
It's an interesting story, Joel, because both gold bugs who are bullish, they think you should have 100% of your money in gold 100% of the time, and if you're not, you're violating their religious precepts, kind of thing. On the other hand, you've got some people that think gold is a barbarous relic, as Keynes called it, and people shouldn't be interested in it at all. I always tell people I'm dispassionate when it comes to gold. If I like any asset class, it's because of the merits, and I think gold has been very misunderstood. I told people back in January that two of the big positions we were going to have, and we still do, although I lightened up on treasuries a little bit recently, was what I called the odd couple. You wanted to be long both treasury bonds and gold. Both of those have done very well this year, certainly relative to the stock market and most other things. Gold's story is a lot deeper than just these geopolitical fears. I think the geopolitical fears have kept a bid in gold at times in a recent past when it could have sold off otherwise. But this is a bigger story. This is about long-term central banks are going to continue to print money. One of the things not getting nearly enough credit recently, but some of the headlines for gold's pop this morning did allude to this, is that Europe is now slipping back into recession. What does that mean? It means that the European Central Bank's balance sheet, which actually for the last year and a half or so now has been contracting, unlike everybody else's, it's going to have to start growing again if they don't really want to plunge down, circle the bowl and go down the toilet. So you have to like gold longer term, even if the near-term picture is a little bit murky, because as time goes on, all the currencies are going to be devalued. There's going to be trouble keeping all of these economies afloat. Listen to what Stanley Fischer said yesterday. That was big news that didn't get nearly the attention it deserved. And I told my readers, it was funny, Joel, a couple of months ago on one of my issues, I said, hey, Stanley Fischer is AWOL, and one of these days he's going to come riding to the rescue as the markets get increasingly concerned about, does Mrs. Yellen really know what she's doing? Because here's a guy, the new vice chairman, of course, of the Fed, who has probably one of the more impressive and extensive resumes of any central banker in the world. He's now the number 2 guy at the Fed, and you watch, he's probably going to end up having the status of, say, a Dick Cheney to a George Bush when it comes to the Fed. And when this man came out yesterday and said that we have still remaining structural problems of the world economy, growth is disappointing, etc., you just took some of the starch out of the argument that interest rates are going to rise sooner rather than later, and that's also good for gold. And I've got a handful of individual companies on my list that these are the kinds of companies I'm telling folks, take a small position. If you're buying it right with most of these prices still down, these are the kind of things you don't have to lose sleep over at night. And if I could mention just one,
Sure.
there's a company based in Toronto called Seabridge Gold. It's SA on a New York exchange, SEA on Toronto. They have over 50 million ounces of proven and probable gold reserves, which is the highest characterization of reserves you can get. So, I mean, these are bankable reserves up in British Columbia. Most of those are in one project where they just in recent days got the environmental approval from the British Columbia government that their plan to eventually produce these reserves is sound economically and environmentally not going to cause a problem. Seabridge, to me, if you could find just one stock of an explorer that has massive reserves that continue to grow that you can characterize as a long-term call option on the gold price, it's Seabridge. I mean, Cowen, which is a big investment house that follows this company, has a $70 price target on Seabridge. It's selling for just a whisker under 10 right now, which incidentally is at highest it's been in 2014, even though gold is about $65, $70 off of its high from earlier in the year. Seabridge is at its highest level of this year. And what's really interesting and important to look at, Joel, for people looking at good plays among miners, you want to find companies that have no trouble raising money when they need it to further a project. And just recently, for the second time in about the last 7 months, Seabridge was able to sell a chunk of stock at 25% over the market price.
Wow. Wow.
Telling you that somebody, and there's a lot of big investors in this thing, they know what's there. And when the point comes, it's not going to be next week or next month. But when the point comes that gold is off on the next leg of its long-term secular run, and the economics look better and better of this thing, this stock is going to explode higher.
I like the relative strength there. I can definitely see what you're talking about here. It looks like it's trying to break out as well here over the 950 level. In your letter today, you headlined it "Calling Mrs. Merkel." Okay,
Yep.
so you're looking at the political situation over there, and you're calling on Mrs. Merkel. Now, what role and what do you want her to do to clear up this situation?
Well, Joel, first of all of these major geopolitical fears, the one that is already doing damage to stock markets, to currencies, chiefly the euro, and whatnot, is the tussle over Ukraine. This has the potential to explode into a much more global conflict. It already is when it comes to trade and economics. And what needs to happen is this. Most of the time since Vladimir Putin has been leading Russia, he has been working more and more with Europe in a variety of ways to try and bring larger and more stable energy supplies to Europe and, of course, receive imports from Europe as well. What we've seen happen in the recent past with this spat over Ukraine is that Russia is being pushed more into the arms of China with a lot of its trade and energy needs. We've seen that. And also, you've got the news recently of this new BRICS developmental bank. And my fear is, number one, that the longer that this goes on, and I don't think our hands are clean in this thing in any way, shape, or form. We were the ones that helped to stabilize Ukraine's government to begin with, that caused all the sectarian fighting and between the ethnic Russians in the east and the Ukrainians in the west and so forth. But what the concern is that the U.S. is trying in various ways to protect the role of America and the U.S. dollar in the majority of the world's transactions. As time goes on, the world is going to move away from that. And the unfortunate thing is that there are a lot of people in positions of power that are so eager to protect that role that they'll stir up conflicts over this. Now, Mrs. Merkel's role, simply, Joel, is that she is the most powerful political leader in Europe. She and Russia's President Putin have a very good working relationship until recently. And if the two of them got together and said, look, we need to really work to defuse this. Germany decides, Mrs. Merkel decides, we're not going to do any more what Barack Obama and the State Department tell us they want us to do because they have their own agenda here. We have an agenda for Europe and for the peace of Europe and Eurasia. We want Vladimir Putin as a partner. Doesn't mean you forgive anything that Putin is guilty for, but neither does it mean that we continue this silly tit-for-tat sanctions regimen, which is only going to hurt economies. I mean, she's got a lot of people, even in her own country, Joel, in business who are saying, hey, you got to stop this. Elsewhere in Europe, look at the deal at the end of June that Russia got together with Austria for the, I can't remember the name of the particular project, but a $45 billion deal over several years to develop a pipeline that's going to go underneath the Black Sea around Ukraine and provide natural gas to Austria, to Italy, and some other countries. These people want to do business with Russia. I think there's a lot that has been exaggerated. There's a lot we haven't been told about that whole deal with the Malaysian plane and with what started Ukraine's mess in the first place. But summing it up, for the better fortunes and the peace of Europe generally, Mrs. Merkel needs to break free from taking instructions from others, get together with Putin, and if the two of them did this, they would settle this, and you'd have less fears in the market, less fears that Europe's economy is going to get worse than it already is.
And taking a look at this Deutsche Bank chart, holy moly, you talk about a ski slope going down here. I mean, she looks like she has some, domestic problems to deal with as well. And
no question.
Yeah, in 2012, I mean, the European situation put a dent in the bull market, and now you have Deutsche Bank here, trading at its lowest levels really since that crisis. So she's got a lot on her plate, at home and as well as dealing with the international situation. S&Ps continue to lose altitude here, down 350 and 1929. Just your final thoughts here, Chris. We had to pull back off highs and then the quick 2-day rally, taking back half of the move here and not getting much follow through today. You mentioned before you were looking for some continued downside. Do you have any projections? You think we're going to get through that low of last week of 1890 and a quarter in the S&P futures and perhaps make this correction a little bit deeper?
We may well do that. In fact, yesterday morning in that newsletter I sent out that you referred to, I said that if we couldn't close above 1940 yesterday, this rally was in trouble because that, of course, was where the market rallied to just prior to that before it went down and broke, through 1900 last week. You probably know more than I do in front of you where the 100-day moving average is right now, but if we go through that again, this time the market may not be so lucky and turn around that quickly. You have to be careful because we're still subject to the headlines. We're still all hostage to that. And if all of a sudden there was some breakthrough someplace that was really good news, people would be buying. But my counsel to my readers is that if you're looking for opportunities to short, you want to be looking at European stocks. There's a good ETF, EPV. You can short European indices. They're in a lot more trouble than ours is. Always keep in the back of your mind that if we do get more downward move, you're going to have a lot more juice to be able to short it. European stocks, probably emerging market stocks as well. But the U.S., we tend to be the cleanest shirt in the hamper of dirty laundry. And so will we still go down? Yes, but probably less bad than most other places.
Okay, we've had Chris Temple on the line, editor and publisher of the National Investor, giving us a national and international look at the markets. Chris, we really appreciate your insight, your fundamental analysis. Hope to have you back on again soon.
My pleasure. I always look forward to it, Joel. Take care.
Okay, thanks, Chris.